Well, still in conversation with Swarup Mohanty from Mirae Asset Investment Managers. And we've been always talking about Nilesh Shah from Envision Capital. And Swarup has been talking about as to how there is no one better to pick mid and small caps than Nilesh Shah. Nilesh, I almost thought that this is a bromance, and I was questioning why am I even here between these two long lost friends.
No, it's great to be on this show with Swarup and you, Aisha. It's a fantastic kind of a show to be here. And obviously, yes, Swarup, it's been a pleasure and an absolute delight to have known Swarup for all these long years and to have worked with him. So it's been a fantastic journey. And thank you so much to you and to Itina for getting me and Swarup on the show together. So it's an absolute pleasure, absolute delight to be here.
We were hoping you would make it to the studios, but yes, traffic snarls. Therefore, the infrastructure investment fund that Swarup is going to be starting. But Swarup, you've always talked about that there is no one who comes better or even close to as great Nilesh Shah is when it comes to picking up mid and small caps. Any of his style that you've imbibed now?
No, I must tell you that, in full disclosure, we mutual fund guys come with disclosures.
Of course.
Or disclaimers, When I started my mutual fund journey, first is understanding equity came from Nilesh Bhai. First few years of going around on calls with him, seeing him talking to investors the way he did, laid down the foundation of how you should approach investing, first of all. Secondly, in those days, mid and small, correct me if I'm wrong, Nilesh Bhai, mid cap was perceived as almost a bad word. Very risky, and in the formative years of the industry, let me put it on record, Nilesh Bhai was probably one of the first mid-cap stock pickers of this market. And in giving mid-cap a good name, history people forget, I think he would have given it a big boost at that point. So understanding mid-caps or smaller companies, for me, started with him. So hence, when we were discussing this lineup, and now when mid and small are at this very interesting juncture, no better name than him came to my mind.
Oh yeah, absolutely. But Nilesh, India will always be a small and mid caps market, right? It always has been. Yes, large caps should be part of your core portfolio. But the big gains are always made when you catch them young and, see them grow. Wanted to understand what is your thought on how small and mid caps should be treated right now? And should you really be looking at that broad umbrella classification? Or is it really about stock picking within small and mid caps?
So stock picking is pretty much almost like the eternal truth. I mean, in the sense that, stock picking is relevant for any investor, any fund manager, any CIO, irrespective of whether it is large cap, mid cap, or small cap. The wonderful part about mid and small caps, at least for India, are that firstly is that many years ago, many mid-cap and small-cap companies IPO'd themselves prematurely because interest rates were high, borrowing from banks or NBFCs was expensive. The VC and the private equity system was not fully evolved as it is evolved today. So a lot of companies just thought that going to the market was the best way to de-risk the balance sheet and raise capital. And in the process, what we have now is a universe of almost about 4,000 to 5,000 companies which are publicly listed, of which you could probably classify maybe 100, 200 as large cap, maybe another 200 as mid cap, but the rest is all small cap and micro cap. So to that extent, I think what we all have is the benefit of a very, very large universe. The second thing, and I think it's very, very important, that while in between we keep, all of us keep saying mid cap, small caps have run up, it looks a little risky. But I clearly believe that have the big picture in mind, that as long as we keep growing at this 6-7% in real terms and 10% in nominal terms, until we don't get to a stage where from $3,000 per capita, we move to about $9,000 to $10,000 per capita, we essentially, it will be an environment where mid to small size companies will continue to do well, will continue to grow at a faster pace versus essentially the big names or the large names. So I think clearly the universe is very large. And secondly, is that there is longevity to this opportunity, that we are not going to go from $3,000 to $10,000 per capita, say in the next 2 or 5 years. This is going to be maybe a journey over the next 10, 15 years. And so clearly this is an opportunity for the next 10, 15 years. So even if there are these corrections between 5, 10, 15, 20%, I don't think it should worry us as long as we have the very long term and the big picture in mind.
Yeah, Nilesh bhai, Swarup here. Just to look at the landscape and what we believe is the democratization of this landscape. When you look at the story, we at Mirae Asset were culprits of stopping our mid-cap fund, citing that there were not very opportunities. But if you look at the last 2-3 years in particular, especially last year, which has been one of the largest public listing years for us, I would really like to understand from you and for viewers, because even today small cap is more a timing kind of a product, when to get in, get out. And what you reflected upon is very important from investing perspective. Because of the listing, the number of listings in the mid and small have only started increasing. Indian promoters are coming at a valuation, and what you talked about is very important, because listing now is no longer premature like it used to be earlier. And then one, the importance of a fund manager in this side, and more importantly, how in the last 2 years, the number of opportunities for fund managers, hence the need for a complete buy and hold from an investment perspective for the next 10 years augurs well, instead of trying to look at it from an in-out strategy, is something which only you can say best. That's something which I'd like investors to hear.
No, absolutely, Swarup. And that's a great point. And yes, surely timing does help. But when we kind of really talk about the most recent IPOs, and when I say the recent IPOs, means the IPOs which have come out probably over the last maybe 1 year, 2 years, or maybe even over the last 3 to 4 years. I would say in the post-COVID era, but more so in the last 3 years. I think a very, very interesting opportunity set is around digitalization. Prior to that, when we in India used to talk about technology, we would talk about technology services companies, or at best a handful of technology product companies. But what we have seen over the last maybe 3 to 4 years is essentially pretty much a flood of companies which have used technology to basically reach out to customers and offer them products and services, and thereby basically significantly improving their go-to-market strategy, that achieving what probably earlier would have taken them to 20.
Seem to have snapped that line. Seems like while we were in the studio, it must be raining really heavily, is it? Okay. Oh, I think Nilesh is back. Yes, Nilesh, continue your point, please.
So I think clearly you're going to clearly see a lot of new set of opportunities. And I clearly believe that digitalization, using technology to reach out to consumers, to reach out to businesses, according to me, is a phenomenally huge and as an area to really kind of pick and invest into. So I think this mid and the small cap space will continue to keep getting more diverse and continue to keep getting more enriching thanks to IPOs. And while some of these IPOs have come in at relatively mature valuations, but I think even post their IPOs, a lot of these companies have essentially continued to grow. And we've seen this over the last 4 years, be it say an online broking platform, an online insurance platform, or an online payments platform, or an online food delivery and a quick commerce platform. All of these businesses have essentially kind of grown quite significantly. Number one. Number two, post their IPO, few of them did correct quite significantly. But if investors have done their homework well enough, those corrections have only created an opportunity to give a fresh entry or to even buy more into it, and then be able to essentially ride it. So I clearly believe that yes, now the IPO valuations are not as cheap as what they used to be many years ago, but I still think they keep giving you opportunities even in the post-IPO stage.
Swarup was making a very interesting point earlier today that the next India is the B30 segment, the below 30-year-olds, which are going to really chart the next 20 years for the country. And they are the ones who are the new investor pool, and they are the ones, or rather the segment that can be penetrated going forward. For someone who's below 30 right now, starting his career pretty much and wanting to invest, Any pockets within small and mid caps do you think that one should be hunting?
Oh, absolutely, and it is essentially the young India which essentially offers both the hope and the opportunity. And clearly, the young India is doing things in a very different way, be it their own earnings, be it their own consumption, be it their own savings, and be it their own investment. And I think the biggest mantra for any young investor is to see what that young investor does in his daily life, right? And so to that extent, clearly, be it areas around digitalization or the whole digital platforms. Two is basically the consumer or the consumption oriented areas, especially the premiumization, which is basically sweeping the entire consumption landscape. I think that's the second area. And so it's no longer about those just soaps and shampoos. It's also about your basically sunscreens. It's about many other things. It's about your nutraceuticals. It's about your protein products. That's the other second area. And the third is what's really happening in the world of infrastructure. Clearly, the pace at which infrastructure build out is happening, the kind of strides that we are making in the areas around renewable energy. These are some of the areas. So, be it energy, be it manufacturing, be it infrastructure, are also the very big opportunities. They may not be the 10, 20-year opportunities, but they surely seem to be the opportunity for the next 3 to 5 years. And I think the best way to really look at it is what happened in some of the big markets, what happened in the United States 40, 50 years ago, what happened in China 30 years ago, or in South Korea. I think clearly there are enough playbooks globally for us to basically study, see, and see what can potentially happen in India. That's probably what the young investors out there need to really look out for. Look out for long-term, secular, capital-efficient growth opportunities. That, to me, is probably the best way to kind of really address your investment landscape.
If you concur with that view, right?
Absolutely,
because you two were talking about as to how premiumization is the story that's going to, stay pretty much, and it's pretty much structural, one can call it that now.
Yeah, absolutely. Nilesh bhai, the other question is, I've been incredibly fortunate to have worked with one Nilesh Shah, and another Nilesh Surana. Both are incredible mid-cap stock pickers. But what strikes me apart for while people will talk about their stock picking ability, not many will talk about their risk framework. But when you look at investing in small and mid, what are those risk frameworks that people need to put in place from an investment perspective as retail investors or normal individual investors, which you would advise people? Because every time these two words come in, the risk also comes alongside.
Yeah.
And
you
how
have
do
to have the stomach to,
hold
through the down cycles also.
Yes, yes.
And Nilesh, that's such a great point, and that Swarup has just picked up. How do you get your risk appetite right, and how do you identify the framework?
So there are three broad areas where one needs to be really focused on as far as risk is concerned. Number one is essentially the governance of the company, the governance standards. Okay, I think, and that should be a negotiable. Number one. Number two, essentially, are risks coming in from the balance sheet. Okay, in terms of debt levels, whether the business can generate the cash flows, and third, the risk to do with the businesses itself, which means the product market fit, the right to win, the growth opportunity, the addressable market. These are some of the areas that to do with the business, and along with that comes in competitive intensity. So I think from a risk framework point of view, one should really look at it in terms of these three components. One is governance, two is balance sheet, the third is business. And I think if one is really focused on these three things, I think one can try and avoid risk, but I think one can surely mitigate risk. So I think that is extremely, extremely important.
Cue to wind up as well. Seems like Nilesh's tech is definitely acting up. And Nilesh, thank you so much for your time today. It really means a lot.
Thank you. It's a pleasure being on this show with you, Aisha and Swarup. It's an absolute delight to be here.
That's why I'm saving this frame, and you know which WhatsApp groups this will go out to. But thank you so much for doing the absolute honor to be doing this with him.
Nilesh's frame looks the same for the last 10
Correct.
years.
We'll discuss that on a 45-minute show
we
again.
need to know his secret. What nutraceuticals is he on? Is what I want to know.
But thank you so much. Really, really appreciate it.
Thank you so much.
Okay, been a pleasure, Swarup. Thank you so much for being the guest editor today and talking about banks, consumption, premiumization, infrastructure, and of course, stock markets and what investors should be doing. An absolute pleasure having you today.
Such a big learning day for me. Thank you for this experience. Cannot thank it enough. And really, it's been a great day. I mean, I had not thought this is the way it works, but to learn this whole process of how people come to understand markets and putting it so simply. So all credit to people like you, and thank you so much for having me.
Thank you so much. And on that note, we're going to take a very quick break, but come right back. Our programming continues on the other side.